And our three-stock lunch is focused on Warren Buffett. The Oracle's shaking up Berkshire Hathaway's portfolio with some bold new bets. That includes new $3 billion stake in Citigroup, more than $2 billion invested in Paramount Global, and more shares of Chevron, bringing his total stake to nearly $26 billion. Here to trade these names is Jeff Mills. He's Chief Investment Officer at Bryn Mawr Trust and a CNBC contributor. Jeff, let's kick things off with Citi. What is your play here?
Yeah, hi, Julia. So Citi is interesting, and Tyler alluded to it in the previous segment, but it is all about time horizon. I know it's cliche, but especially when a stock is cheap, like Citi is, it's trading at 7 times forward. It has a yield of 4%. And even from a technical perspective, the stock has held in pretty well around that $40 to $50 level. So I do think that if you have a multi-year time horizon, it's a very reasonable entry point for a stock like Citi. I'm just concerned on more of a cyclical basis, a shorter term basis, say over the next 2 to 4 quarters. And it all has to do with my macro outlook. You know, the Fed, we all know, is hiking into an economy that was already slowing down. So I think you want to do your best to avoid areas of the market that are overly cyclical. And for banks, it really hasn't been an earnings problem yet. It's been a multiple compression issue. I just think you're going to have a difficult time seeing bank multiples re-rate in a significant way in the near term. I look at high yield spreads, for example. They're still reasonably tight. As credit starts to deteriorate, you usually see pressure on bank multiples. If the economy starts to slow, then you could see pressure on earnings as well. So I think it's a good long-term story. I just don't think it's for this market.
Let's take a look at a second one, and that is the media firm Paramount Global. $2.6 billion Buffett put into it. What makes Paramount a standout in the streaming wars vis-a-vis a Netflix or a Disney Plus or a Hulu or whatever?
Yeah, hi, Tyler. Yeah, I think it's interesting, and it kind of speaks to Buffett's style generally. And, you know, at 13 times forward earnings, I think the downside is somewhat limited here. So potentially he's looking at valuation. But then also the core business has remained reasonably stable if you look at the last earnings report. So fundamentals good there. And then huge growth in the direct-to-consumer business. You know, the subscriber growth has been really strong. I think DTC revenues are up something like over 80% year on year. And I think the content story is very good for a company like Paramount. You know, you mentioned Netflix. I will be the first one to raise my hand and say I got that story very, very wrong. And I think there was a lot of fear that built up around that earnings report that streaming growth was dead. I think Disney sort of dispelled that rumor after they reported, and I think there's still growth there. I think Paramount will be able to capitalize. And just from a technical perspective, this is a stock that's bounced off $28 3 times. So as with Citi, I don't know that there's a terrible amount of downside to the stock from here.
Well, my question then is for our final name, Chevron. It's trading at around an all-time high. How much more room is there to run for this stock?
Yeah, all-time high price, but still not a crazy multiple, you know, looking at 11 times forward. So a little bit surprising there. And I would say energy is really the only sector for me that I guess is a little bit opposite to my anti-cyclical trade generally. Energy is consensus. It is overbought, and Chevron is no different. It's 26% above its 200-day moving average. But I would be buying weakness because I think there's an idiosyncratic issue in the commodity space. I think oil prices will generally remain high. I think supply was tight already, and then obviously with Russia and Ukraine, I think that perpetuates that issue. So that's going to continue. The price is reasonable, even though it's at an all-time high from a valuation standpoint. So I think you can buy on weakness with a name like Chevron or really anything in the energy space right now.
And we see Chevron shares up about 1% today. And we have a bonus stock in our three-stock lunch today. Buffett exiting his decades-long stake in Wells Fargo. What's your take on this one?
Yeah, so I would put it in the same bucket as Citi, really, but then obviously Wells Fargo, it's a higher risk situation, right? I think that management needs to prove that it can execute here. There's potentially more upside, but in an environment where I don't think the macro backdrop is your friend, I would rather be moving into financials that are more stable, tried and true execution, like a Citi, like a JP Morgan, versus the risk of a Wells Fargo.
Jeff Mills, thanks so much for joining us for our three-stock lunch plus a bonus.